Meanwhile, China's economy exceeded expectations in the first quarter, growing by 5.3% compared to the same period last year, outpacing economist forecasts of 4.6% growth. Additionally, on a quarter-on-quarter basis, GDP expanded by 1.6%, surpassing both Reuters poll expectations and the previous quarter's growth. The robust growth, driven by factors including external demand and export volume, aligns with Beijing's 2024 growth target of around 5%, likely reinforcing the government's current policy stance. Well, also in Shanghai is Lang Ding, who's an economist and strategist at Macro Hive. Hi there. Really positive figures for the Chinese economy, but we know that the outlook for China's GDP growth isn't as robust as it was, say, 5 years ago. What do you make of these latest figures, and what is your view on what we can expect in future quarters?
I think the 7.3% growth rate is actually, in the reality, I would say the reality is weaker than the number, because this number is adjusted after adjustment of the deflation. So the nominal growth rate in the first quarter compared to last year first quarter is only 4%. It's still, I think, still below the average nominal growth rate last year. The second is that if we look at the contribution to the growth, it's still mainly driven by industrial production, and the domestic demand is still quite weak. So I would say the number is below the surface. The number isn't good. It shows that the problem of imbalance between production and demand isn't solved yet.
That's right. You mentioned there that domestic consumption is still weak at this point, and we know Beijing has been looking to pull several levers in order to get the Chinese to spend in their local economy. What do you think is behind the fact that many Chinese simply aren't opening their wallets at this point to spend money?
Yeah, I think there are different reasons. The first is due to the pandemic, the COVID pandemic. So the household has lost their income. The second is, of course, a main part of Chinese consumption is related to the housing. We still have the downturn of the housing sector is still, I think, still intact. So the investor, as well the consumer, is still reluctant to buy homes. So it's also still weighing on the consumption. So I think that there are two reasons.
Yes, we spoke about earlier that the German Chancellor Olaf Scholz is currently visiting China, looking to boost trade ties between the two massive economies. What do you think is Beijing's strategy right now in terms of dealing with Western countries who are really looking to increase their market share in the Chinese domestic market? Is there an appetite from Beijing to welcome this expansion of Western businesses in China?
Yeah, I think this is I think China really welcomed the visit of the Chancellor Scholz. I think at first, I think that the foreign capital is still very, very important for the Chinese economy, and I think also the export of the Chinese sector is still account for 1/3 of the Chinese manufacturing. I think China really want to achieve two goals. The first is really through the visit of the Chancellor is to really to improve, restore the confidence of the foreign investors to do business in China. China is also doing its part and to relax the restrictions of the investment in China. And secondly, China also want to secure the export market share.
Okay, Liang Ding, we'll leave it there for now. Thank you so much for sharing your thoughts with us on TRT World.
Thank you.